Good day, everybody. Made a post a few days ago in regards to mortgage forbearance. Been hearing lots of questions, been getting lots of questions, have seen countless posts from numerous friends online in regards to this. And I've seen some bad information, lots of bad information, and a little bit of good information. But ultimately, I mean, when I was getting questions, I was like, man, I do not know. It got me scratching my head a little bit. I'm a real estate agent, a realtor, and the questions I was getting are outside of my expertise. So as I promised, I said I was going to get an expert, and I found this guy, John Haney with Colorado Mortgage Company. He's from Colorado Springs. I believe he's been in the mortgage industry for going on 17 years now. So I'm very reputable guy. I actually was fortunate enough to meet him through mutual clients. I was the agent in the transaction, and my clients actually were friends of his, and they spoke very highly of him, and I had given them some options for other mortgage providers, and they were like, no, Logan, you got to talk to John. He's phenomenal. This guy knows his stuff. So I'm very excited to have him on this call today. And yeah, John is going to fill us in on the details of what is this forbearance. I know I've got some questions for him, but let's go ahead and bring John on here. John, welcome to the Zoom meeting. Super excited to have you.
Great to be here. Thank you.
Yeah, so forbearance is the big topic of the day. I've seen a lot of questions, a lot of people out there, some good, some bad information. But let's dive right into this, shall we?
You bet.
And actually, I've got a little kind of in a nutshell what forbearance is.
Okay.
And I'd like to get your input after I share that story and see if this is kind of in line with what a lot of people may unknowingly be signing up for.
Yeah. All right. Good.
And the title of the story is Mortgage Forbearance Math. Mom and dad have a mortgage. It's currently $1,500 per month. Dad gets laid off. Times are a little difficult. So dad called the loan servicer and asked for a forbearance. Sounds like a good idea. In one phone call, he gets 6 months off from paying the mortgage. 7 months later, dad is finally back at work. Family hasn't been able to save any money during the forbearance. So forbearance is lifted, and the servicer says, all right, mom and dad, that will be $9,000 plus $1,500, which is now due. So you owe us $10,500. Dad almost passes out, like, what? Yeah, servicer says, that's the 6 months of forbearance plus the current month that you signed up for. Dad, well, I can't do that. Can we work something out? Sure, we could do a loan modification, and we'll spread that out over the next 12 months. Okay, phew. Oh, good. What's that going to look like? Servicer, that's going to be $2,250 a month for the next 12 months. Dad's not feeling much better about this situation anymore. Still, I cannot afford that. Servicer, sorry. Dad, like, can we refinance? I've got a ton of equity in the home. no, because the loan went into forbearance, we're not going to be able to do that for you. Well, what can I do? And I think that's the question a lot of people are asking. What can I do?
Well, first I would say your math checks out. I was doing the math as you gave the numbers. So 2250, that could be the case. So first of all, I guess what I would say is, for people who might be tuning into this, forbearance ought to be considered a measure of last resort. And forbearance does not. Number one, let's just clear the air on forbearance is not forgiveness. I'm hearing a lot of the same misinformation out there that, oh, it's no big deal, it's going to be tacked on to the end of the loan.
Right.
No penalties, there's no backlash. Well, that's just not simply. It's just not true. There's, forbearance. That money still has to be paid, and the big question, of course, is how and when is it going to be repaid? So, right now, under the CARE Act, there's this option for 6 months plus an additional 6 months that can be added on as a second term. So up to a year potentially that those payments can be pushed off. And so I am definitely seeing some people share with me where a forbearance for 6 months absolutely means that they have a balloon payment that's due after that 6 month time frame. So when you did your math, you've got $9,000 plus the extra $1,500 that's due the seventh month.
That's heavy.
And I feel that's yeah, I mean that's a heavy payment that somebody could have to come up with. So all right, so maybe in the example you use, maybe the servicer says, yeah, we'll allow you to pay all of this back over a period of an additional 12 months. We'll just chop it up and you just pay it back in a much larger payment, but not a balloon payment, just a larger payment monthly until you get caught up. That's where I suspect most of these forbearance plans will go. Again, it's not forgiveness. It's just not like it's going to be on the end of the loan and you'll never feel it, see it, because you'll probably move in 10 years or whatever. That's just not the case. So
Well, and
hopefully that.
I think that was a lot, the language, the key, and the big part of the language I was seeing when in the conversations about forbearance and all the advertisements being done about this forbearance is that there will be no penalties or late fees or reporting to credit agencies during the time of forbearance. And that was the key, during the time of forbearance. So it was kind of like, whoa, wait, well, what happens after the time of forbearance? And I think that is the critical misstep a lot of individuals are making.
Yeah, it's very, very important for people who might be seeking this out is to ask a lot of good questions, number one, but also consider the longer term impact. So David Stevens, who's the former head of the Mortgage Bankers Association, I was recently on a call with him, and he was talking about how this is you go into forbearance, it's a major credit event, okay? And typically when you have a major credit event, like a foreclosure or a bankruptcy, or you're late on your mortgage, a major credit event can prevent you from being eligible for other financing in the future. So whether it's refinancing or purchasing, when you have a major credit event, even if you were eligible for financing, you might find yourself paying a lot more for that loan in the future because interest rates and pricing, it's all based upon risk. What's the risk to the lender that you're either going to default on the loan or have a major credit event that you're going to be in a forbearance plan or something like that. So it's, again, this forbearance should be considered, as it really needs to be thought out, and some more food for thought about the impact of what a forbearance could look like for a loan servicer. So if you're a servicer, you have a customer that goes into forbearance, they still have to pay the taxes, property taxes, they still have to pay the insurance, and they still have to pay the interest and principal to the owner of that loan. And so a servicer could, servicing companies could stand to lose billions of dollars. Now, I don't feel bad for the servicers, but understand, right, the impact that it can make to us as consumers and to
Right.
people wanting to borrow money in the future. It can definitely have an adverse effect.
Yeah. Oh, yeah. And unquestionably, this is hitting the mortgage financial world hard. There's a lot of people going this route straight for the forbearance and just putting off payments.
Right.
Suppose someone's already in forbearance. They thought it was, shoot, let's take advantage of not having to pay a mortgage for 6 months. How cool does that sound? Maybe, hopefully, they're in a position they don't necessarily need it. Are there any options out there to kind of take me backs, or what
Sure.
could somebody do if they're already in forbearance?
Well, great question, because they can just tell the lender they're going to start making payments. I mean, if they started making, just sent money to the lender, they will take the money. Trust me.
I believe
So yeah. So I would think that even if somebody entered into this agreement with the lender, if they find themselves in a position to make the payment, then even if it's some of the payments, I mean, anything that they can do now to maybe keep from having a giant balloon payment or
yeah,
a significantly higher payment later on, I would just suggest that they contact the servicer. I mean, always communication is always key when it
absolutely.
comes to making sure that you're telling your lender what you're doing, what's going on. If you make a payment, let them know, hey, let's rework the agreement on the forbearance, whatever it might be. So that's a great question.
Okay. All right. So, and I'd be curious, do you think if they handle that forbearance before the end of the forbearance, do you think a lot more providers or mortgage servicers are going to still report that forbearance?
Well, that part is still unknown as far as how the reporting of a credit event like this may happen.
Sure.
And so, I would think if at least one or two payments were missed, or even if a forbearance plan was put into place, I would think that would still show up somewhere along the way. When we see in credit reports, for example, when we see people had deferments or even a discrepancy or a dispute about a certain account, that information is reported to the credit bureau.
Okay.
So again, it may not show up as a late payment. You might not get the hit as a late payment, but I bet the language will show up there. And again, this is
Okay.
uncharted territory so far, so
Sure.
can't give you a for sure answer on that.
Okay. And does Colorado Mortgage Company do they service any loans, or are you
We're
more of a mortgage
no,
broker?
Yeah, correct. We're not a servicer, and so again, I'm speaking for the industry and with my knowledge of what's going on. And so as a broker, we have contractual agreements with the ultimately with the lenders and the servicers that our customers would wind up with. And so that's why I'm very well in tune with what's going on, because this affects everybody at multiple different levels. And so yeah, so we're not a direct servicer, and that's why each servicer will have their own policy on this. And so it's not just a blanket policy across the board. It's going to be a balloon payment, or it's going to be pay it back over the next 12 months. Each servicer is going to have a different policy on this.
Okay, so it's definitely critical to have communication with your mortgage servicer. Sounds like
Absolutely.
you've hit that a couple of times. Everybody's got their own policy with this.
Yep.
Okay.
Yep.
Um,
Right.
on foot and kind of back to the good questions. What would be some good questions some people should be asking? Because through the CARES Act, it seems like, I'm sure before this, when you went to apply for a forbearance, maybe there was a little more process to it with verification of hardship, so to speak, on why you're asking for a forbearance. Whereas, because I looked into it for us ourselves, and it was like 8 questions, and all you had to do was answer yes to the questions, and then bam, you're approved for this forbearance. No qualification, nothing done. So it's so
Right.
easy for consumers to get. So
Well,
what questions should we be asking?
yeah, and to your point, you're absolutely right. So before this, the CARES Act came out, what's different and unique about this is that you only have to attest that you've been financially affected by the COVID-19 virus, and that
Right.
your income and you had a financial event that was outside of your control. So you only have to attest to that. So certainly some people use that just as a free ticket to skip some mortgage payments.
Yeah.
And you know what I would say is, number one, if you've been impacted financially, if you've been directly affected by this, my heart goes out to you guys. I hope that
Absolutely.
you're able to get back to work and get back to a more normal life as soon as possible. But in the event that a forbearance is the right answer for you, then the questions that you want to be asking, and this is very, very important. I'm going to go elementary school. Who, what, when, where, how, ask the
Exactly.
adjectives, right? Like,
Yeah.
ask those questions that you get an explanation on, because every servicer in the country is going to have a slightly different policy on what they're willing to do when those payments come due, how those payments come due, and what that's going to mean to you, and what it's going to look like for you going forward. So really just asking those questions: who, what, when, why, here, where, and and I think that you ask enough of those questions, you'll probably get a very good picture of what it could mean to you.
Uh, yeah. Awesome. Um, and is there, you had mentioned forbearance kind of be a last resort option. 'Cause I know there's definitely some concern about this kind of being like the times back in 2008 with the real estate market crash. Um, and I kind of wanted to point out to people there's some major differences in terms of, I mean, during 2008, 2009, the market was way over leveraged. I think there was, oh, God, over $700 billion of refinances paid out leading up to that point. Whereas
Yeah.
now we've got nationally, there's $6.3 trillion in equity stored up in residential real estate. So maybe there's some other options for a lot of people out there before they dive into this forbearance.
Yeah, you bring up a really good point. And just as an example, for if someone has a government-backed loan like an FHA or a VA loan, there may be options for them, even if they're currently unemployed, to be able to do a refinance and possibly take advantage of a low-rate environment where they might be able to save some money on their payment without having to prove their employment status.
Okay.
So that might be an option. Another option might be, looking at harvesting some of the equity that they do have, and maybe they need to just consolidate some higher interest rate credit card debt,
Sure.
or something
Yeah.
like that, where by maybe they still have income, maybe one person's still working in the household, maybe consolidating some debt and locking that in can really have an impact to their cash flow and help them weather out this storm.
Sure.
Another option might be a home equity line of credit, which is a second lien against the property.
Right.
They tend to be
HELOC.
a little bit more restrictive. Yep, a HELOC, home equity line of credit. They can sometimes be a little bit more restrictive as far as credit scores and equity position. But you're right. I mean, I find most of my clients have gained some really nice equity in their homes over the last several years.
Yeah.
And that's where forbearance could put that at risk, where if they have a big balloon payment, and they're not able to make that balloon payment, now they might be forcing a lender might force a foreclosure,
Sure.
because if you got a lot of equity in your home, you're at risk. You still have to make your contractual agreement with the lender on your principal and interest and your escrows. And so again, this is it should be considered a last resort, because those the damage that could be done could be significant.
Yeah. Hmm. All right. Yeah. I mean, I think I could see why I've seen someone referred to you as John the mortgage strategist. Sounds like you know your
Right.
stuff.
Well, thanks. Yeah, I don't consider myself a salesperson. I consider myself an educator, and
Yeah.
and usually when I am able to make a meaningful transformation with somebody, and I don't quote rates and fees. It's not what I do. I like to really educate people on what the real options are and cut through all the noise and BS in the marketplace, because there's a lot of it. Generally, when people really take a step to learn what it is that they're doing and what their options are, it can make a huge impact for them financially for the rest of their lives.
Oh,
And so certainly this is
absolutely.
one of those times that is it's weird, it's different. It's kind of like the Twilight Zone for a lot of people.
Yeah.
And so again, like fake news, right? Bad information in the marketplace
Yeah.
is what really can get people hurt. And anyway, so I'm really glad that you invited me to do this call, because this is really, really important and relevant content right now.
Oh, absolutely. I think a lot of people are going to find all the information you said. I mean, I wanted to get an expert to get the insight on what is this forbearance thing, and thank you so much for delivering on that. And sorry, you might hear some construction noise in the background. I had to move away from the homeschooling in the house and move my office outside for a moment.
Yeah.
But yeah, no, John, thank you very much. And yeah, shoot, I will. I mean, I encourage everybody to feel free to reach out to John or myself. I mean, John's got all the answers on this stuff. Obviously, you're the expert on the mortgage financial world. I'm just want to provide some information and help people properly navigate and be guided through this process. So thank you for delivering.
Hey, you bet. Thanks for having me. Stay safe, stay healthy, and hopefully
You
we'll
as
see you again
well.
soon.
All right,
Okay.
John. Catch you out there.
All right.